Hey
There.
everyone, good afternoon. Thanks again for joining us on our Aguilar Realty Group Wednesday Hot Topic live stream. I'm Hector Aguilar, and this is,
Banner agent.
hey guys, we're all with Aguilar Realty Group. We're powered by eXp Realty, and today's hot topic is,
We got the should you sell or should you rent? And the
that's
reason
it.
why,
Go ahead, Ben.
yeah, the reason why I think this topic is really important for everyone to hear about, Hector, is because I have a client recently that inquire as we're selling the home, should they sell their home or should they rent? And that's interesting, right? A lot of people these days are kind of scared. What are the next steps if, is rental a good selection or not? So we'll go
You know
over
that,
that
that's a
today.
that's a really great topic, right? So there's two
Yeah.
ways to look at this, in my opinion. Number one is, should you sell or should you rent, right? That's the main question. And the truth is, it depends on your financial goals, right? What I'd like to do is cover a little bit about what the pros are on renting, right, and maybe some of the cons, and then finish off with understanding what the benefits of actually selling is right now versus renting. So let's go ahead and start
Good
with
idea.
that. We'll talk a
Okay.
little bit about some of the pros of renting,
Sounds good.
right? So what's the first thing that comes to mind, Ben, when you rent a property out? What's the goal of renting it out?
I mean, of course, you want some money, right? It's all about the money.
Absolutely,
Yeah.
right? So you want a monthly income. And right
Yes.
now, the truth is rents are high, right? Depending on where you live. I know here in the valley that we serve, a three-bedroom, two-bath right now is leasing close to $3,000 a month. So the first thing that you could benefit from is, right, that high monthly rent.
Yes.
And I think that's important to understand, because if you're starting to want to, if your goals are to start a portfolio, then what's the easiest thing to do is to maybe rent your house out while you buy another house, or maybe you rent in another location, or maybe you want to take some equity of that and then buy it in a different state. There's different goals for different folks, right? But obviously, monthly income is a benefit,
Yes.
right? One of the other benefits that I find, Ben, in renting out a house is that the tenants help you build equity. And
Yeah.
how does that work, Ben, as far as building equity?
Well, I'm assuming that equity, for those don't understand what equity is, it's actually the proceeds you get on top of your uh, what you bought from your house. Everything
Mhm.
above what you bought for your house is your equity. So when you have tenants that are living in there, you're they're participating in that building. So let's say you give an example, right? So the house is 200,000. You
Mhm.
bought 200,000, now it's 300,000. Well, if you have tenants also paying rent, that's
Right.
on top of that.
Right. Not only that, but you take the rent. Let's say you have a mortgage of, let's say, $1,500 on that. Well, you take the difference and you can either do what? You can either pay down the debt that's owed on the property to help you build
Correct.
equity faster, or you
Yes.
can take that $1,500 a month and then repurpose them for, for enjoyment, or you can take that and maybe, pay off some debt, or maybe, buy a car, or whatever the case is, right? So you can either use the income as income for, dispensable expenses, or use that difference to be able to build some equity, pay down your mortgage. And that's typically the number one thing that, people do with their equity differences. They pour that difference into the equity and build it up faster, right?
Got
And
it.
so those are a couple of the pros of renting. Obviously, you get a monthly income. The tenants help you build up your equity because you're paying off the mortgage debt a little bit faster. But there are some inherent risks, right? And I think
Yeah.
that's what we got to talk about, is what are the risks, right?
Right.
And so we discussed what are the cons of renting,
Yeah.
right? What's the first thing that comes to mind, Ben, when you are the landlord and you have tenants?
Well, you got to carry some responsibility, and if you don't have a property management company, then you're literally taking all these responsibility that we're talking about. You got the maintenance, the repair. You're gonna have them maybe call you. Hopefully, they're good tenants, right? But
Right.
we've heard some bad tenants that complain about every little nick and cranny
Right.
possible.
And
And
you said something really important, Ben. Like, if you don't have a property management company, guess what? You are the property manager. So you're going to expect calls in the middle of the night. You're going to
yeah,
expect, tenants to call you and complain about every little knickknack.
yeah,
And unless you're prepared mentally to be able to handle that, then maybe renting may not be for you, right? But again, there are some pros. This is one of the cons.
What about a situation we have now, right, with our client, where they have the opportunity to, maybe this is not the right time, but
Well,
I was,
I know what you're talking about. You're talking about the Nelson transaction, right? Well, that's one of the cons, right? This particular seller wants to sell his property, and the
yeah,
tenant hasn't been paying, and
yeah,
because of COVID laws, right?
protecting them,
They're
yeah,
protecting them, so that's another inherent risk, and we'll get a little bit more into detail when we kind of go further into the cons.
okay,
One of the other most important cons that I feel that most owners don't know is that renting the property could possibly cause them tax implications. And let
mm,
me elaborate on that just a little bit. So the IRS code says that in order for you to claim a property to be a principal residence, the owners would have to occupy the property a minimum of 24 consecutive months in the last 5 years, right? And what does that mean? Let's say, Ben, you rent your house out and you rent it to, let's say your cousin for a couple of years, right?
mm,
Well, and you decide in 2 or 3 years, you know what, I want to sell the house, right? And you've already exceeded those first 24 months that you vacated.
right,
Well, the IRS is going to want to tax you now for the equity gain that you experience from the time that you sold or when you bought the property and to what the price is today, right?
the
So
capital
that
gain, right? Like,
capital gains, absolutely, and that could be anywhere between 30 to 40% depending on where you are in your tax bracket, right? So
mm,
that's one of the things about renting. If you're going to be renting long term, you have to understand that you're going to have to face tax implications in the future if you decide to sell past those 24 months. Now,
mm,
let's just say you want
right,
to sell, right? And your cousin has been in the property 2 years now.
okay,
And guess what? In order for it to be qualified as your principal residence again, you now have to occupy the property for the next 24 months for the IRS to consider it your principal residence and maybe not face those equity tax gains or capital gains taxes, right?
so what you're
So,
saying is if the homeowner currently does not live in the property, but someone else lives in the property for 24 months, there is potential tax that you have to pay, right?
yes,
And then if that person moves out, then you have to, as a homeowner, have to move back in
yes,
another 2 years
correct.
to waive that tax, correct?
It's not essentially waiving the tax, but then
But
the property would be
defer.
qualified as your principal residence again. So if you decided to sell, then you wouldn't have to pay those capital gains tax because the IRS now recognizes that you've lived there for the 24 months consecutive of the last
Out
five
of the
years,
5 years, okay.
right? For it to qualify as your principal residence and not have to pay capital gains. So,
That many people
one
would
of the
want to
things to
do that.
consider that because capital gains could be brutal, right?
Yeah, that's a lot.
Yeah.
And it's
So
interesting how we learned about capital gains. If you want to learn more about the trust, in another workshop we did, that was
yeah,
interesting.
that was pretty powerful. But here's the thing is if you do have that property for more than 2 years as a rental, you still may be able to sell it. And last week, if you look at our on our live stream from last Wednesday, we had Phil Atwan with 1031 Exchange Resource
Right,
who explained to us how we can kind of move up that equity, have it work for us, and not have to pay
true.
taxes through a 1031 exchange. So, if you are thinking about having your property as a rental long term, what you want to do is you want to make sure that you watched last week's episode so you understand 1031 exchange and you can protect yourself against capital gains as well.
Awesome.
One of the other risks that you take as a investor landlord when you rent your property is the risk of non-payment by tenants, and we just alluded to that a few minutes ago, right, Ben?
Right.
In terms of tenants, tenant laws that are in place right now because of COVID that are going to end at the end of 2022, thankfully.
Yeah.
But many landlords have been placed in really tough positions, right? You've got
Yeah.
tenants that have been affected negatively by COVID. They lost their jobs or they reduced their hours. And all of a sudden, they just didn't have the financial capacity to really make their mortgage or their rental payments to you. And as a landlord, because of the landlord tenant rights, we were handcuffed, right? There wasn't
Yeah.
much that we could do to evict them or to maybe get a new tenant in the property because the laws were meant to protect tenants. And it's
Yeah.
understandable. We
Yeah.
went through COVID, went through a pandemic. Many folks were impacted financially and are just now starting to come out of that. But let's face it, it was kind of a bad deal for landlords because now, like just the example with Nelson, right? The example that
Right.
we just talked about, the seller wants to sell. The tenant hasn't been paying probably for the last year and a half or two, and they started the eviction proceedings, and they were protected by the eviction proceedings, and it took, I think, 8 or 9 months for them
Yep.
to finally get them out. Right? We got the good news last week that the sheriff actually went to evict them out last week, and finally our buyer is going to be able to close on his property that we
Woo!
actually put into escrow last July. Remember, Ben?
And we had to get 3 appraisals, or 4 now, right?
Yeah, we had to get 4 appraisals because the appraisals only have a shelf life of 60, 90 days. So, it's been an interesting journey with that one. But that was a perfect example of some of the risks that you take as a landlord if you're going to rent your property out, right?
Right.
Obviously, if you rent it out, you're going to want to vet your tenants, right? Run their credit, ask for income information, make sure that they have money in the bank so that they're
Right.
financially strong to rent it out.
Yeah.
I guarantee you, every landlord's done that. But again, there's sometimes there's things that happen that are out of their control. In this particular case, COVID put them in a bad spot, right? And
Yes.
of course, going through the headaches of eviction, right?
That's
Like
not
we
easy.
just mentioned, it took how long? Like 9 months, right, Ben?
And we got another video on evictions,
Yes.
MT evictions. That was a really, really key one to watch as well.
No,
So,
thanks for reminding me, Ben. That one was very informative. Again, if you're a landlord now or you're thinking about renting out your property and you want to learn about eviction options, definitely look at. We have two of those actually with Paulina from MT Evictions, just because there was an original one that we did a few months ago talking about COVID restrictions, and then there was a new
okay.
SB 9 that actually passed recently in terms of some changes in a window period from April, May, June to be able to evict people out. So that's
Dang.
another great video that they can
Yeah.
watch. But again, the headaches of eviction, right? You kind of
Yeah.
take that risk on, if you decide that you want to rent your property out.
And we
Right?
don't
So,
say all this to like deter you from renting, of course, but there are cons to everything. So
yeah, no, I mean, ultimately the decision is yours as an owner. We just want to give you the information so that you make an informed decision and that you can have some expectation as being a landlord, right? My recommendation to most landlords is you might want to be like the property owner or the property manager, if you have one or two properties that you have the time to manage. Otherwise, the truth is that you're better off paying a property management company, and they're not that expensive. They charge anywhere between 8 to 10% of the monthly rent to manage the property for you. Do keep in mind that the property management companies don't pay for repairs. They'll manage
oh,
the property for you. They'll collect the money for you, right?
we
They'll
need
vet
a
the
video on
tenants
that.
for you. What happened?
Leave it in the comment, guys, if you want us to interview a property management company. I think that would be a
Yes,
good idea.
yes. I think that's probably our next hot topic next week. And it's well worth it in my opinion, paying that 8 or 10%
Yes.
to have someone manage and those headaches, because they could be headaches. And if you don't have the bandwidth for that, if you don't have the patience for that, it's not to say that, like Ben said, it's not to say that we're discouraging you from being a landlord. You just have to know your options, right?
Yes.
So now, of course, we want to go look at some of the benefits of selling, right, Ben?
Yes, sir. Yes.
What's the very first thing that is a huge benefit of selling your property versus renting it?
Oh, sorry, Hector.
It's okay.
So yeah, and we both got excited. So
Yeah,
enjoy your equity, gain it immediately.
right.
That's the good
What does
stuff.
that mean, Ben?
To
To
me,
enjoy your gain immediately.
to me, it's just like, you have it sitting in a big pot. In the bank account, just
Right.
sitting there waiting for you, and once you sell it, you're able to use it, which we're gonna go in the different things that you can use it immediately for. So
Absolutely. If you sell now, you can enjoy your equity gain immediately, right? You can dispose of it the way you want. You can use
yes,
it for
it's
different
your
things.
money.
But the first thing that comes to mind if you sell today, aside from the equity gain immediately, is that you're potentially going to gain the equity tax free. What do I
Hmm.
mean by that? Right? So let me explain. There's an IRS code that says that a seller or sellers can enjoy up to $250,000 of equity tax free with a maximum of two people. So
Oh,
if it's husband and wife, mother and son, father and daughter, maximum two people that are on title. And the reason why I preface that is because sometimes you have, owners that it's husband and wife and maybe like a son or daughter who helped
yeah,
them qualify to buy their first home, right?
yeah.
And when they go to sell, only a maximum of two people can benefit of that IRS tax code that says that up to $250,000 of gain tax free. So if you have two people, you can have a gain of about $500,000 tax free.
Wow.
Every dollar after that, let's say 500,001 and above, that difference you may be subject to some capital gains, right?
Got it.
But depending on how much equity you have in your property, you may be able to experience that entire tax gain tax free. So that's one of
Well,
the
what about our
benefits of
client
selling
here on
today.
Shaver? Our
I'm sorry.
client, our client here on Shaver, I mean, that client will have what, 250,000 or
Yes,
200,
of tax free gain, correct.
250 or 200? Sorry.
250,000,
Wow.
right? Now, mind you, this particular client, she may have some tax implications because it's only her on title, right? And her equity gain could possibly be more than 250, but still it's $250,000 that she doesn't have to pay any tax on. So
Right.
that's one of the benefits of selling today, and the potential of tax-free gains. Okay.
Yes.
One of the other benefits you have of enjoying your equity now if you sell is you pay off your bills, your cars, your RVs, your boats, maybe your tax debt, maybe credit card debt. It allows you to, since you freed up that money, to be able to pay off and pay down your bills, and that's one of the benefits as well. As a real estate agent, we're a little selfish, right? We want to be able to help you gain your equity so that we can help you buy another home, right? And that's the strategy, is to use that equity, and we're experiencing now, just like Gloria, right? What is Gloria's goal? She wants to sell her house.
And get us a nice home just like this one, but
Yeah,
pay down the monthly mortgage. And so
right.
we
She wants to
understand
she
that.
wants to move up. She wants to move from what she has now to something a little bit more elegant, maybe a little bit higher price, and she's going to use that equity to be able to
Yes.
put a stronger down payment and have a payment that she can manage,
And
right?
her car bill
And she
completely
wants to pay
paid
off her cars.
for. Yeah.
So it's a great example of how selling today versus renting could be a benefit in that sense, right? Pay off your bills, pay off your cars, use
Yes.
the equity to purchase another property. But let's say you purchase another property and you have extra money. One of the other benefits if you sell today and you gain that equity is maybe you do want to get a rental. Well, maybe you'll have some money left over to be able to buy a rental property. If you
Yes.
don't own a rental property right now, I typically advise my clients to start small, right? Maybe buy another house as a rental, or maybe buy 2 to 4 units. It's still considered residential as a rental. And as you start building your portfolio, maybe you can sell it, exchange that equity through a 1031 exchange, tax free. Well, maybe not tax free, but you defer your tax payment. Again,
That's where the 1031 comes in, guys.
that's right. That's where the 1031 comes in. And Phil's video is going to explain that. So make sure you
Yes.
watch that one. It's a good one.
Yeah.
And then you start small and you can maybe exchange that into maybe 5 or more units, which is considered commercial, right? So by
Yes.
freeing up your equity, you pretty much give yourselves many more options in terms of what you're going to be gaining versus you renting out. It's just something for you to consider. Obviously, if you want to rent and you want to start your rental portfolio, that's not a bad decision either. But you have to be able to understand and know what the potentials are and what you're getting into, right? Again, we
Yes.
talked about, to recap, we talked about maintenance, repairs.
Yes.
We talked about potential tax implications. We talked about potential, tenant challenges and eviction challenges that you might face as a tenant. We also recommend that if you do rent out, that you get a property management company to help you. I think that
Yes.
would be the best thing to do, to kind of alleviate that. And if that's the way you want to go, we can help you do that too. We can help you, vet your potential tenants. We can help you market the property for lease. We can take some pictures of it. We can help you in that department as well. But
And I
go ahead.
quickly, we have 8 viewers right now. It will really help us out if you hit those hearts and likes. It's real. Do us a favor right now. Just hit some heart. If you're watching, all 9 of you, just hit the hearts. It helps with the algorithm and the SEOs, and we appreciate anybody that just pops in, and watch
Absolutely.
it or rewatch. If you rewatch, let us know in the comments as well, and tag a friend or a realtor, or anyone that you're selling a home to right
Mhm.
now. It will really help. Whoever it will help out. Please do that.
Absolutely. We definitely appreciate your, watching our channel. Hopefully we're bringing some amazing topics to hand.
Yes.
We want to bring something of value that someone can use at the moment, and they're topics of the day, right? Like I said, the reason why we chose this topic today is because, Ben has a client that's in a situation where he's thinking of either renting or selling. And
Right.
so we said, hey, let's talk about it because I don't think the conversation is being had enough, right?
Yes.
We certainly appreciate you watching. Hopefully, you guys can get some great value out of it. Like Ben says, leave some comments, hit some hearts, hit some likes, share it with
Yeah.
someone who you think might benefit from it.
Yes.
And also, if you ever want to rewatch it, you can rewatch it on our Facebook pages for both Ben and myself. And you can
Yes.
also watch it on the Aguilar Realty Group YouTube page and the
Yes.
Ban Your Agent YouTube page as well. So thank you again for joining us. I hope this was of value. We look forward to seeing you next Wednesday in our Wednesday Hot Topic of the Week. And
Yes.
I'm Hector Aguilar with Aguilar Realty Group, along with.
Ban your agent.
We'll talk to you soon,
Aguilar
everyone.
Realty Group.
Thanks for joining us. Take care.
Take care, everyone.